Business Now with Madison Reedy. Madison, you say house prices are on the up again everywhere or just some spots?
Most of the country, so yes, they are on the up again. In fact, actually just in Auckland, house prices have now recovered the past 2 years' worth of declines in the property market. Now that's according to figures that were released this morning from the Real Estate Institute of New Zealand. So they released what's called the House Price Index. That measures the changing value in the country's property market. So that rose 5.6% in the year to the month of November. Now the national median house price, which they also measure, that was up 8.6% to a cost of $630,000. Now, November was actually the strongest month in the past 14 years that the Real Estate Institute has seen with these figures. And that actually also saw record high median house prices across 10 of the regions, including Auckland. So an average house there will now set you back $885,000. Now, economists at the bank Westpac were pretty quick to say today that we told you so. They've been predicting for a number of months now 7% annual house price growth next year in 2020.
Do they think it's because of the cheap money, cheap loans, or what's driving it?
A historically low interest rate environment, which means that mortgage rates are the lowest they have ever been. But there actually was a drop-off in sales. So it seems that some house sellers are actually holding back because they do think that even though there are more first-home buyers in the market because they can get cheaper money now, that they may actually pay higher prices in the future. And these figures certainly support that. And Westpac is saying that they now actually might expect to see that 7% annual house price growth earlier than expected.
Interesting. Okay, so Z Energy, they have downgraded their guidance today, is it?
Yeah, they have. So this is the country's biggest fuel retailer, Z Energy, which is also listed on the market. They've today cut their earnings expectations for the year ended March by 10%. Now, they're now saying that they expect their underlying profit for the year to March to be between $350 million and $385 million. Still seems like a heck of a lot of money, I understand.
Yep.
But it is down from a previous forecast of up to $430 million. And that, in fact, was an already downgraded number when Z downgraded their initial expectations in May. So earlier this year, before May, Z was actually expecting to make an underlying profit of up to $490 million. So if you're a shareholder in Z, you take this double downgrade today. In total, $140 million has been shaved off the top end of Z's earnings guidance.
Are they in any way, shape or form pointing the finger at the government's reports on profit and some of the things that they might have to do in the future?
They're not necessarily pointing their finger at that, although Z has done that previously. And actually last time they released, I think it was their half-year profit last year, they did point the finger at, in fact, the government for saying that, they were fleecing consumers on prices, and also the regional fuel tax. They've said that has impacted their sales volumes. That, again, is a reason for this profit downgrade. Also, weaker refining margins, which is what they're earning at the Marsden Point oil refinery, which is run by New Zealand Refining in Northland. Z Energy, among with some other fuel retailers, do actually own a stake in that, and they're earning less money off that at the moment. Also falling retail margins, and again, those sales volumes falling off.
And what else has been going on the market today?
Yeah, so Z Energy's share price did take quite the battering as a result today. It fell 13% in today's trading to close at $4.23. Overall, the NZX Top 50 Index fell 0.6% to close at 11,241 points. The New Zealand dollar, that's buying much higher at over 66 US cents at 66.2 there. Also at 95.5 to the Australian, but it is buying much lower at 49.1 against the British pence. That is because the British pound has surged as a result of the UK general election. That's because the market is now pretty certain that they're going to see Brexit delivered under Boris Johnson's reign.
Thank you, Madison. That's Madison Reedy with our business news here.